Good morning, everybody. Hope everyone is doing wonderfully well as we get into the game plan action here on this Friday morning. So we have a lot to discuss, guys. There's earnings out today from the big banks, JP Morgan, Wells Fargo, and Citigroup. We also had PPI data that just hit, and guess what, folks? Inflation is not dead. We'll go over those numbers in just a second. Then we're going to get into charts. We have a lot of charts to look at. The mega cap technology stocks getting crushed yesterday. What are the key levels to buy those plays as they retrace down to the downside? All right. So without further delay, let's get right into the action here and go right into the charts. So let's talk some PPI data first and foremost. So number one, what do we have here? We have core PPI. Expectations were 0.2% rise. It was a 0.4% rise. Now remember, this is the key to PPI data. This is the inflation on the producer side. And what usually happens is the producer side, it filters through to the consumers over time, right? So initially, the producer sees inflation. They say, okay, we got inflation here. So eventually they raise prices on the consumer goods and the consumer gets that inflation. So it's not as clear cut as just saying, oh, who cares about the producer side? It actually is important. So right off the bat, 0.2% was expected. We got a 0.4%. That's double expectations. Then if you look at just PPI month over month, expectations were for a 0.1% rise. Expectations were again there, and it came in at 0.2%. So double there as well. And so really, what do we take away from this? Well, number one, a lot of investors will kind of discard this because they don't like to look at PPI data quite as much as the CPI. They look at CPI as being more important. But we have to understand, and I'm being real with you guys as I always am, is that this will eventually filter into the system. Now listen, if oil starts coming in, if we start to see more commodities come in, maybe this helps it on the producer side, and maybe it's not as dramatic for the consumer. But either way, this is a warning sign here that inflation is not gone, and the Federal Reserve needs to be vigilant on not going back to easy money policy, which will then create inflation on its own. All right, so again, essentially what you have here, in my opinion, if I had to summarize, you have a beast, the beast of inflation, the dragon of inflation has been almost conquered. But again, if you don't finish it off, it's going to come roaring back. And mark my words, if the Fed goes back to easy money policy over the next year or two, if the government doesn't get their spending in order, this monster is going to come back with a vengeance in 3 to 5 years. Okay. Now looking at the S&P 500, this is the pre-market data right down here. You can see initially the market got a little spooked at that number. That's basically algorithms. So algorithms read this higher than expected inflation data. They quickly sold, and then most investors said, meh, who cares? We got the good CPI data. The Fed is talking easing policy. That's all we care about. And the markets came right back in line with where they've been. So listen, at this point, markets are basically flattish to positive going into the open. But we do have mega cap to watch today, and we'll get into that in just 1 second. Before we do that, I do want to just go to the daily chart and talk a little action here. So if we flip over to our daily S&P chart, the charts continue to amaze me after 25 years. They still blow my mind here. And what do I mean by that? Well, just simply put, look at how the market is staying within ranges. And I talked about this, I believe, yesterday in Trading the Close. But we have this area right up here, over here. It just kind of bubbles up here, here, and all the way over here. We then break down through this channel, and then the lower end below the channel becomes resistance. We hit once, pulled back. Hit twice, pulled back. Hit 3 times, and there's your beginning of a pullback right there. Now, it doesn't really tell us whether or not this will break higher eventually or not, but ultimately you just respect the level until the level is broken. That's all a technician does. Respect the level until the level is broken. All right, so that is an interesting little level on that chart. The other thing I want to show you is the NASDAQ 100. This is the weekly chart of the NASDAQ 100. It's another beautiful parallel here. And what we do is we take the low from 2020. So this is the COVID low all the way over here. And we basically do a parallel through the lows of the bear market in 2022. And then we stretch that parallel line up to the highest point, the previous all-time high in 2021. And what we find is, look at right here, right there. And what we're actually doing here, and I'm going to zoom in, so be ready. So what I'm going to do is I'm going to zoom in right on this for you guys so we can take a closer look at that. Because what has happened earlier this week, we were above that line. But look, See the tail right up there, or the wick? It's now been rejected, and it looks like the weekly might close with a topping tail. Topping tails, again, guys, have long tails at the highs of charts, and the body is in the lower 25% of the candle formation. That's a key bearish indicator. Now, listen, we don't know what happens today. Maybe it negates the topping tail here. We have to watch where the market closes today. But suffice it to say is that just the mere fact that it was up here and it got rejected back below this line, that's interesting to me. If we were to rally up and close back above that line, then I would say, okay, that's fair, that's a strong close, but anything at this line or below to me would be bearish, and the most bear case would be if we got the topping tail in addition, which is what we have now, but we do need to see the price action today. Okay. Next up, we go to a couple of the earnings this morning. Take a look at Wells Fargo. Wells Fargo disappointing on the earnings front, closing yesterday around $60 and change, trading at $56.82. It's not a massive move, but remember, these are big banks. They're not going to have 20% moves in a day. If they do have 20% moves in a day, something is drastically wrong in the financial system. So again, it's a nice drop. I think it's about 5 to 6% drop on Wells Fargo, trading at $56.84. If we flip to the daily chart, where would the level be? And what we can do here is really there's going to be a level here at approximately 55 and a quarter. So we can see right this low right here of this consolidation. You had all this consolidation. It dipped before it broke out. That to me is your lowest point right there. That's around $55.25. So that will be a level to watch today. Now for me, I don't know if I'll trade that, to be honest, in the live day trading room. There'll be lots of other trades. Yesterday, by the way, the Apex live day trading room had 9 trades, 9 for 9, 9 winners yesterday. And that's because volatility was back. As a day trader, I don't care if the markets go up or down. Just give me volatility and I can make money. If there's no volatility, it's a lot harder. Still eke out some small gains, but that's the nature of the beast. A good day trader relies on volatility. That's all they care about. Okay, so what are we looking at here, folks? All right, so if we zoom out on this chart of Wells Fargo and we go back here, the level for a potential swing to me is right in this zone here. So see these tops right in here? I don't think we get there today, but this would be a very interesting level, and I'm going to show you why, right? So this is right around 50.75. So what I want to do here is we're just going to do our fibs. I want to do my fib, and I want to see what the fib would be and see if there's an alignment. And so what I've been doing with you guys lately is doing fibs and then seeing if the levels align with any other technical levels, right? Well, here's our fibs. And basically, I'm taking the lowest point of the big move up to right at the highest point. That's how you do a fib. And you look for the retrace levels on your Fibonacci. So what I see here is, watch this. Where is the 50% retrace? Look at this. And then if I put my lines back on the chart, boom. You see that? That's cool. So the point is that I want to stress to you guys, when you find your trades based on technical analysis, I'm assuming a lot of you guys are watching because you're into technical analysis, look for at least 2 factors. If you find 2 factors or more, the odds of success on that trade are probably around 70% or greater. The more factors, the higher the probability of success. Just remember that, guys, because again, this is a lot of stuff that I go over here, stuff that institutions have people on their staff that they're paying like $1 million a year to. I'm giving it to you guys in these game plans for free because honestly, I'm trying to level that playing field. And remember, Monday is Investor Empowerment Day. And that's a huge day for us here at Verified Investing. We're going to be doing a 2-hour from game plan all the way through the morning trading floor till 11 o'clock. 2 hours of me right here with my screens in front of me. And I'm going to be trading live, talking and doing the live day trading room, pre-market action all the way into the open. It's going to be awesome. But there's a caveat. It's only going to be available on the Verified Investing homepage live, where you can ask questions as well. So don't forget, guys, if you want to come, you have to come to the homepage on Monday of Verified Investing, and there you'll be able to participate in this event. It's going to be epic. And again, afterwards, the replay will be on YouTube and other socials, but the live event where you can participate will only be on the Verified Investing homepage. But it's going to be fun. I'm excited. First time I'm going to be really trading live well, listen, it's not going to be all my screens. I use about 7 or 8 screens here in the trading room. I'm going to have 3. I'm going to have my laptop with the 2 side screens. So it'll be a little bit of a handicap, but I'm going to do it, and we're going to trade here and run the live Apex day trading room. Okay, let's go on to some other earnings here, guys, real quick. JP Morgan reported earnings. JP Morgan is trading at 208. It initially fell on earnings, and then it's just basically floating back up. Their earnings were actually pretty good, but again, the stock is at all-time highs, basically. So for me, I wouldn't be surprised if it comes back down a little during market hours, more so because profit-taking might come in. Their earnings, again, were good. It's just profit-taking. And then Citigroup actually earlier was looking pretty good. It did put in a topping tail. I was telling the traders in the trading room here, see that topping tail right here? So look at the fall. What I was saying to them in the trading room is, hey guys, we got a pre-market topping tail. If it retraces, I had a short out there. Needless to say, it didn't get filled because it didn't retrace up here. My short level, I think I put it at 68.15. But that's just interesting to see, and then you can see the follow here. It's still net positive on the day, but again, if you look at the daily chart of this stock, it has gone parabolic, and it actually has a lot of resistance up here. So this would be another one I wouldn't be surprised if it closed flat to negative on the day, even though they did report solid numbers. Okay, a couple other stocks here real quick that I want to go over. Tesla, monster drop yesterday, finally getting that drop that I've been expecting. Just like that, we're in the money here on the trade that I had with the Smart Money Stocks and ETFs members. As we were shorting right up in this range, we started here, we added a little bit more here, and just kind of dollar cost averaging in after 11 straight up days. It is trading down today. They basically delayed their robo-taxi unveiling till I think October from August. That's making investors a little bit nervous this morning. And again, there's a couple levels. 231 is a gap fill, and then you have the big level down here at around 209. That is going to be a major support. I think it's also a 618 Fibonacci retrace from the start of this move to the high right there. And again, that's the key. Remember the confluence. Find your levels that match up. That'll give you a better probability of success, swing trading or day trading. All right, so interesting there. And again, we are seeing that coming down. I'm keeping an eye on Meta today too. Look at this. Yesterday got crushed on Meta. It's now, just as we speak, breaking $500 per share and flushing down. So that's a beautiful little mover. There are some levels in the kind of the low 490s where I'm going to be looking to trade that, as there's some key support levels down there. But one of the things I want to show you guys is, could you have predicted that this was getting extended? Well, yes, you could have. So take a look at this. So, and this is, by the way, I am short this with members as well, and we're in the money now as well. But the idea here is you have two trend lines that are converging right at the highs, and it's basically in double top. So what I have to do is look at if I can zoom out here. So you have this point of interest right here, right to here, and right up here. So that line got tagged. This upsloping steep one, if we zoom back in real quick here, that one again got tagged. And what I like to tell people is use a lot of your common sense. Don't use emotion. Emotion will screw you, frankly. It'll get you to do the wrong thing at the wrong time. It gets you to FOMO in at all-time highs. It gets you to panic and dump at lows. When you use common sense, and this is what I use to kind of start to accumulate this on the short side, is I said, wait a minute. So you're telling me that they reported earnings after hours on this day. The stock dropped 20%. There's been no news since, but somehow the stock's making a new all-time high. Something doesn't jive there. So that's the common sense, the logic aspect, which you can use as a trader and investor. And then you need also the technicals, though. I don't want to discount the technicals. You can't just say, oh, I have no technicals, but I'm using logic. Because honestly, sometimes our logic can be faulty. So the idea is you can use logic, but then also use the technicals right up there. See how those two lines are converging? That gives you that dual probability, that two-factor probability. Now, could I go and find some other factors? I might be able to, but in the very least, we got two there. The stock fell to 512 yesterday and is now trading below 500 today. We'll see where it goes today, but I'm looking forward to trading this, frankly, in the live day trading room. All right. Having said that, let's take a quick break to do our drawing here, guys. So I want to do our drawing for the winner yesterday, which was NordVPN. NordVPN is whoever gets this gets a free year of NordVPN. I appreciate them donating those. TradingView as well donates free TradingView, which is fantastic, as well as all of our other stuff on that wheel of appreciation. Marco Lucas 9987, reach out to Verified Investing, I should say support at verifiedinvesting.com. They'll get you all hooked up with a free year of NordVPN. Very cool stuff. All right, follow me over here. We're going to spin the wheel and see what we'll be giving away on Monday. By the way, Monday, the Wheel of Appreciation will be in motion. We'll take a break at some point in that session, that 2-hour live session, just available on our website. to find out who wins this. There you go, guys. Range Trading Mastery right there. That's a great course if you want to learn how to trade the range on a stock, whether it's a range of a monthly range or a weekly or a daily range. This is an amazing course. And again, you'll get 3-month access to this course, and I think it's about a 3-hour course, so you should be able to watch it 5 times if you really want to within that period. Great course. Learn and educate, folks. Education is everything. All right, when you're not educated on something, fear takes over and emotion takes over. Once you start understanding the charts, it really just takes away that fear and emotion, and it becomes a numbers game. It's a probability game, and it's so empowering to get to that point. And again, this is what, Investor Empowerment Day coming up on Monday is all about, is taking us to a level where the institutions are. So many retail investors are just in this zone of being nervous. Oh my gosh, what's going to happen? Oh my goodness, what's going on? That stock just dropped there, or that crypto just did that. Just look at the charts, start learning. Think about the charts as a book that's in a foreign language. Like, I don't know how to read Chinese, so let's imagine this is me and looking at Chinese. I'm like, oh my God, I've no clue. But if I learn how to read Chinese, I start to understand what it's telling me. And that's what you have to do with charts, is just put a little time, 5 minutes a day. And remember 6-7 minute abs? 5 minutes a day of chart reading and analysis and education. And in a year, you're going to be like, holy cow, who was that person before that was trading? And by the way, I say that about myself. I look back when I first started trading in like 99, 2000, back in the dot-com bubble. I was literally on message boards. Yes, they had message boards on the internet back then. It was a long time ago. And I was like, oh, look, this person's pumping this. It was kind of like in a weird way, like Reddit or something. And I would jump in and I'd probably lose money, and I lost. Sometimes I made, sometimes I lost. I had no clue. And I was illiterate, essentially. But as I learned over time, things change, and that's the beauty of it. We can all do it. I don't have a high IQ. I got regular. I'm assuming regular. So if I can do it, you guys can do it. All right, we're going to take 30 seconds to quickly take a look at what the Apex Live Day Trading Room is all about. Take it away. Hey everybody, welcome to the Apex Live Day Trading Room, where you're getting multiple pro traders with decades and decades of experience calling out trade signals, as well as their own trades, entries, and exact exits for you guys over your speakers on your computer, your phone, your iPad. In addition, you're going to see our screen. So you're going to see, as we move our mouse on the screen, on the chart, all the data, all the information that we're doing as we're making money as traders. We are translating that to you guys. Lots of education, literally from 9:30 to 4 p.m. with a small lunch break in between. Everything you need to make money as a day trader right here at the Apex Live Day Trading Room. All right, guys, we are back. Let's get right into the action here. Here's your Bitcoin chart. Bitcoin, again, continues to flip-flop. We've seen a flush down to the 52,000 range, a bounce back to almost 60,000, and it's just hovering here. So what this is telling us is that investors don't know what's going on here. There's a couple things I want to make you aware of. So number one, Germany accumulated, basically confiscated a bunch of Bitcoin. They are in the process of unloading that. They've already unloaded a bunch, but that is a sell pressure on Bitcoin. As that kind of gets wound down, we might see that pressure alleviate. Maybe, and this is still what I'm thinking, is I still have upside to this level as a likely upside resistance. Now listen, that's only 60, 61, 62,000. It's not a massive move, but in the very least, this test should occur, I think. Now, the one risk to Bitcoin remains risk assets. So if per chance we continue to see the stocks fall, the mega caps fall. Now listen, yesterday the Russell had an amazing move. So we saw rotation of capital. Now remember, and I want to do a quick little note on this. This is really good for education. So you've had the mega caps run and the equal weight S&P and the small caps be left totally behind. I mean, to the point where the Russell hasn't even made a new all-time high since 2021. But what ends up happening is when those things get too overdone and they start to fall, people are not scared. The VIX is still at like 12 or 13. That's really low in terms of the fear index. And so no one's going to pull their money out of the market at this point. If you're long, you're not pulling your money out of the market generally. I mean, there'll be a couple people. But the idea is what they do is they reallocate. they essentially redistribute. So they take some profits there, and now they're pushing them into the small cap and the mid cap zones and the equal weight other names that haven't run. Which, by the way, that brings up Zoom. WBA is an interesting one down in these. There's a lot of good names that are solid that probably are due for a bounce. But remember this: once the VIX right here, all right, VIX, once the VIX gets near 20 or above 20, that's where fear starts to get a little bit more intense. You'll see money being absolutely pulled out of the market. So you're not at that point yet, but I do want to give you the warning of what to look for. VIX gets above 20, watch for money to actually leave the market versus just be redistributed in various levels or areas. Okay, in any case, keep an eye on Bitcoin at that level real quick, guys. Gold today, we're getting a small pullback on gold after a big move up. Really, at this point, I continue to think at some point we're going to be breaking out above this high pivot here, and we should head towards 2,500 on gold. And by the way, we're going to probably go higher than that. That was at start of year when we were at 2,000, I said 2,500 by year end. We could go above that, but right now we'll stick with that, and then I'll talk about it when we get towards 2025. I think I said 2024, but you guys get the idea here. But either way, once we get towards the end of the year, I'll unveil my price target for 2025, and it's going to be a lot higher. Okay, on the next one here, silver real quick as we go through. Silver, interesting on silver. Why is silver interesting today? Well, because notice how gold was only getting a small pullback, only a little small retrace. Silver's getting a full retrace. Why? Well, silver is half what gold is, which is safety, play. It's kind of an offset of spending and kind of recklessness by the Fed and by the government. But silver is half of that, right? And it's also industrial. And so I'm watching this closely to see how much the industrial side of silver influences the price of silver over the next few months if we continue to see a slowdown in economic data. So watch that, but silver again pulling back. You have very obvious support right down here. That's right around 29.50. So 29.50 might be a viable opportunity on silver. Next up, let's quickly look at oil here. Oil continues to grind up. It's now coming back to a very important level around 84, right in here. This is going to be a big level. Now, I've been pretty bearish on oil. We got that one little pullback. Now it's retracing. I'm curious to see. I'm still bearish on it because of the macro picture, but I want to see maybe it can break out in the short term. If it does, you're headed to about 87. So 87 would be your upside zone there. Of resistance. That's that pivot top right there. I still think net, if you talk about where we are in 2025, I still think oil's probably down in the 70s, if not even the 60s or 50s, because of a slowing economy. I know no one's really buying into that at this point. Everyone thinks, oh, it's going to be a magical soft landing, no landing scenario. I don't buy it for 1 second because basically I'm a data person, and I look at the data and the track record of the Federal Reserve, and I say, they've never really engineered a soft landing, maybe once in a zillion times, right, in all the time that it's been around. But you have to go with the data. The data shows us that they generally are behind the curve on everything. They were behind the curve on inflation and raising rates. They'll likely be behind the curve when the markets turn down as well. Natural gas today starting to downtick a little bit more. I'm still interested in a buy in this zone right here. That's your key support level. It's the 618 Fibonacci from down here to up here. And it's also a pivot point right here. So again, that confluence of factors gives us that good zone. Lastly, I do want to talk about the dollar yen here, guys. The dollar yen yesterday got a big drop. Look at the drop on the dollar yen here. Let me erase this so we can go to that chart. Look at that drop yesterday. Very similar to when Japan intervened. This happened to come when that CPI data came out. There's speculation, check out this speculation that I'm hearing, is that Japan timed their intervention with that data to make it look like the CPI was the cause, so the dollar weakening and then the yen kind of strengthening. Because this shows you that the dollar weakened and the yen actually strengthened. They timed it at the same time because they don't want to be labeled a currency manipulator. Unconfirmed, I want to be clear, it's unconfirmed, but kind of looks like something big there happened at the same time as the CPI hit yesterday. So we'll see here. By the way, major trend line, if you break below here and confirm, this could fall much more. It means the dollar actually would be weakening against the yen significantly. All right, guys, remember, no trading the close today, but we do have earnings whisperers at 3:55 today, which is going to be awesome. That's the new service for earnings traders, or the show for the earnings traders. They already hit a beautiful trade just yesterday. That was a great trade yesterday on Delta Airlines. And again, they give you the levels going into earnings in the after hours and pre-markets. They're going to be trading. I think Netflix reports next week. They'll be trading that live with members. If you want to trade earnings, you only need about, let's say a little bit of time pre-market and then the after hours time, maybe an hour in the after hours, 4 to 5 p.m. And it is a rock star service for earnings trading. All right. On that note, guys, have a wonderful rest of your day. I will talk to you soon. Take care.